Okay, so we welcome everybody, every PU Prime client, as well as every YouTube viewer to our page. And you all know we have a lot of packages that are set up for you as well in terms of education and the knowledges we share as well. So welcome again to this class. Welcome again to this class, and I'm sure you have a lot to learn from this. So our advice, you have your notepad, your pen, or any devices to aid your learning at hand as we begin this class. So today we're going to be dealing with trading styles and how it affects you. Trading styles and how it affects you. Now, this is a very crucial topic when it comes to trading. Now, why is this? This is simply because every one of us has different profession, has different duties, have different points of service. You may be an accountant, you may be a lawyer, you may be a doctor. We all have our different professions to which we attend to during the day. So understanding trading styles will in a great way help you gauge your trading. And this is why we are dealing with trading styles and how it affects a trader. So this is why we are dealing with trading styles and how it affects you as a trader. That is why we are focusing on this. So the beautiful thing about trading is that it gives you the opportunity to make profit from the market, even when you have your work going on, even when you have your point of duty. So you can be a lawyer and still trade. You can be a doctor and still trade. You can be an engineer and still trade. So the market gives us this wide range of opportunities to still make money even while we go about our own personal businesses. And this is why this class is very important because it will put you in the right direction on the kind of pattern to which you should be trading and how you should approach trading based on your activities within the day and based off of your profession as well. Hence, again, the topic for this class is titled Trading Styles and How It Affects You. What this is basically titled as. I'll repeat it again. Trading styles and how it affects you as a trader. So very quickly, what are forex trading styles? Let's look at what are trading styles itself. It's very important to establish or we set a foundation by defining what trading styles are so that you get a proper understanding of what we are trying to discuss. So trading styles simply refers to the approach, the strategy, and the methodologies used by traders to participate in either buying or selling of financial instruments in the global financial markets. So this is the process, this is your approach. This is the style of trading you choose to adapt to when you want to buy or you want to sell in the global financial market. So this is very important because, like I said earlier on, we have different um, professions that tends to give us time or not give us time. So understanding the approaches and the strategies and methodologies on how to approach this is very important. So when we are studying trading style, we are simply studying the different approach, strategies, methodologies used by traders to participate in either buying or selling of financial instruments in the foreign exchange market. It could be long term, it could also be short term, depending on certain factors, which we are going to consider as we move further in these classes. So, like we all know, if we're used to trading, some of these instruments we buy or sell are either stocks, futures, bonds, commodities, derivatives, and even the spot market, which is the forex market. These are some of the commodities we trade off from to make money from the market. Now, note each trading style has its own unique characteristics. It also has its own unique risk profile and its own time horizon. So I would like you to get this. Each trading style has its own unique characteristics. So every one of the trading style we are going to discuss has a specific characteristics. It also has its risk profile and it also has its time horizon. It's very important you take this into consideration when you are choosing a particular trading style. So we are going to dive deeper now since we've already established a foundation of what these trading styles are and what we trade with these trading styles, instrument, forex, and the rest. We're going to dive deeper to understand the characteristics and what these trading styles are as well. So basically, we have four types of traders. It's very important we set this foundation so that we have a proper understanding when come to the point where we need to. So what we're just basically doing right now is the foundation. We're setting a foundation for when we come to the point where we need to. So basically, we have four types of traders. We have four types of traders. Number one, we have the scalp traders. Number two, we have the day traders. Number three, we have the swing traders. And number four, we have the position traders. These are the four basic types of traders we have. I'll repeat it again. Number one, we have the scalp traders. Number two, we have the day traders. Number three, we have the swing traders. And number four, we also have the position traders. The four type of trading styles we have. Now, I'm going to dive deeper to break down and to explain to you these trading styles and how it can fit into your profession, your time zoning, and every other thing that has to do with trading as well. So I'm going to be explaining what these trading styles are so that you get to understand if this fits with my timing, if this fits with my schedule, or can I go with this type of trading even with my working activities. So we are going to understand this after this is being dealt with. So very quickly, let's move over to the next side of this slide. So firstly, we have scalping. Remember, I just listed So remember, I just listed the four types of trading we have, right? So the scalp, the day trade, swing trade, and also the position trade. So these are basically the four types of trading we have. So starting from the first, which is the scalp trading, I'm going to be explaining this shortly. So scalp trading is a strategy that involves you to either buy or sell financial securities very quickly. So you are buying and selling these financial securities very quickly to profit from the smallest market movement. So imagine the market does this, does this, does this, does this. When you're scalping, you are just taking advantage of these smaller movements in the market. So you're not even interested in the major movement happening in the market. The smaller movement is what you are interested in. So the smaller movement is basically what you're interested in, not the major movements primarily. So take a look at this point, take a look at this point. So some traders will focus on catching the whole move from this end right here, even to the top right here. But as a scalper, you are just focusing on the smaller movements, the smaller price movement in the market. So this trading style seldom works for those who have enough timing to focus on the market. So if your schedule is not the type that takes the whole lot of your time, you can actually participate in this method of trading. Taking note of this or taking advantage of the smallest market movement in order for you to make profit from the market. So this is defined as scalp trading. This is defined as scalp trading. So I'll be explaining the characteristics for this type of trading. So you get to understand this easily. So what are the characteristics for this pattern or this type of trading? Remember, I defined trading styles as the methodologies, the strategies, and even the approaches you use in trading or taking advantage of the market movement from the market. So what are the time frame we use if we then choose to be scalpers? Remember, if you are a scalper, it simply means you have control of a whole lot of your time. You have enough schedule, you have enough time, so you can actively stay in the market, trade actively, make profit actively as well from the market. So we have time frames for scalping. So scalping is simply us taking advantage of the shortest market movement. So in other words, we are trading in the short shortest term or in the short term. Let's put it in that way. You're trading in short term. So often it ranges from the seconds to even the minutes time frame. From the seconds to even the minutes time frame. Let's imagine we have the 1 minute, 2 minute, 3 minutes, 15 seconds, and the rest of that. So when you are a scalper, you are just taking advantage of this smaller movement. So you don't stay so long. You just come in and go out. Come in and you go out. So this is what scalping basically is. So what is the strategy behind scalping? The strategy behind scalping, like I repeated earlier on, is taking advantage of price fluctuations, the smallest price fluctuation. So instead of you to focus on this whole bigger move to the top, you're only focusing on the smaller moves, scalping the smaller moves to make profit and to exit the market. That is basically what you are doing when you are scalping. Now, what is the risks involved in scalping? What are the risks involved in scalping? Now, scalping is a high frequency trading in terms of you, in order for you to make money, you need a lot of liquidity. So it's a high frequency trade, and this requires quick market decision. So if you are the type that is always slow to making decisions, I think you understand your personality, you know who you are. If you are slow to making decisions, this is not the pattern of trading that fits your style. So this pattern of trading doesn't fit your style. You must be very quick to making decisions, very quick to analyzing, very quick to exiting, and even entering the market in order for you to capitalize or make profit or from scalping. So are you very quick to making decisions? Do you have enough time? If you fit into this category, then the methodology of scalping could work for you. So the first, I repeat again, is scalping. So what is the next we have? The next we have is day trading or intraday trading. So I'm going to be defining this. A forex day trading is also known as intraday trading. Why or what is this? This is simply the practice of you buying and selling currencies, commodities, or any financial instruments from the global financial market within the same trading day. In other words, you are either buying or selling a financial instrument for 12 hours or for the next 24 hours. You are not going beyond this. So you don't let your trade last so long. You come into the market, trade, make profit from the market, but you make sure these trades don't last till the next day. Are we getting this? You make sure it doesn't last till the next day. You just take advantage of trading within that particular day. Now, of the goal is basically to make profit from the short-term market movement within the next 12 hours to 24 hours. I hope you can see the difference between this and scalping. This, you are staying on the market for the next 12 hours to 24 hours. When it comes to scalping, you are just coming out of the market, taking advantage of the smallest market movement. But in this type of trading, you can hold it for the next 4, 12, and even 24 hours. You just make sure the trades don't cross into the next day. So if you are the type that can give 2 hours to 3 hours or 4 hours to the market daily, you can take advantage of this kind of trading opportunity. So if you know your profession, your work schedule is not going to affect you if you spend 4 hours, or you're not going to be affected if you spend 4 hours on trading, then this type of trading style can work for you. So this type of trading style does not demand much from you. You just need at least 3 to 2 hours in the market daily, and you can be a day trader. Then when you are scalping, you need to actively be in the market. You need to actively be trading, actively take advantage of the market movement happening within the shortest time frame. That is what happens when you are a scalper. So let's move over to the next part so that I explain this shortly. So what is the time frame if you want to be a trader? What are the time frame you should focus on if you want to be a day trader or you want to be an intraday trader? So there are specific time frames for every trading methodology, every trading style, every trading pattern and strategies as well. I listed that for the scalping. Now, what is the time frame when you want to trade? So, intraday trading positions are open or closed within the same trading day. Remember, we established this from the beginning or from the definition of what intraday trading is. So, basically, if you want to be a day trader, you are taking advantage of the 1 hour time frame, the 4 hours time frame, and the daily time frame. These are the three time frames you take advantage of: the 1 hour, the 4 hours, and also the daily time frame when you want to be a day trader. So what is the strategy that involves the trading? The strategy or the process that involves the trading is simply capitalizing on the short-term market movement for the next 12 to 24 hours. Always take note of this. You are taking advantage of the shortest market movement for the next 12 to 24 hours. So what is involved this? Remember, I stated earlier on, you need to devote at least 4 to 3 hours of your time if you must be a day trader. So what are the risks involved with this? So this requires you to constantly monitor the markets. And some of the time, this can be emotionally draining because I mean you're working and you have to check the market in one hour kind of time interval, 15 minutes time interval. Okay, what is happening? What is happening? If you sum this whole total, you find out that you are spending at least 4 to 3 hours in the market daily. So when you are a day trader, you might want to check what the market is doing every 30 minutes. And when you check every 30 minutes, you spend at least 5 minutes. So when you multiply this across 24 hours, you find out that you are spending at least 4 hours to 3 hours actively checking the market. So most of the time, this can be emotionally draining because it requires your active attention, at least for the space of 4 hours. So can you manage this pattern of trading? Does your work schedule gives you the opportunity to take advantage of this kind of trading? So I'm stating this so that you get to understand the trading style that fits your personality, that fits your timing, and that fits your work schedule as well. That is why I'm stating every one of these. So the next we have to this is simply referred to as swing trading. Now, this is the pattern of trading where a lot of people who are in the working space will want to take advantage of. What is swing trading? Swing trading is basically you holding trade for the space of 1 week, 3 weeks, or even a month. So when you are a swing trader, you have the ability, you have the patience, you have the perseverance to hold trade for at least 3 weeks, 1 month, and the rest of that. So it is you taking advantage of the short-term and medium-term time frames. When you're a swing trader, you are taking advantage of the short-term and medium-term time frames. Now, what are these time frames? These time frames begins from the daily, the 4 hour first, the daily, and the weekly. So you are taking advantage of these three trading time frames in order for you to determine the movement that might happen or the half tendencies of occurring in the market. So it involves you again holding trades for a few days and even for a few weeks and even a month in the global financial markets. So what is the strategy involved with being a swing trader? What is the strategy involved in being a swing trader? So identifying and riding prices, swings, or trends. So you must identify, learn how to identify swing points. Now let me do a little technical sketch up here for us to see. Now we have the higher high, the higher low, the higher high, the higher low, the higher high, the higher low. So as a swing trader, you must learn to understand the swing points in the market. Now, where are the swing points? The swing points and the trend in the market, very important. So what is the trend of this market? The trend of this market is going towards the top. So we know we are bullish on this trend. So what is the next thing we do? We have to understand the swing point of this market. So we have our first swing point right here, second swing point here. We have another swing high, swing low, swing high, swing low. So you can see we have our swing highs, swing lows, swing highs, swing lows, swing highs, swing lows. So the strategy behind swing trading is taking the trades from the swing low in an uptrending market. And where is the swing low? This area right here. So you're willing to take trades from the swing low and hold them for the longest period of time. Now, the next chart should show you an example of this. Now, take a look at this right here. What I just explained. We have the swing high, the swing low, the swing high, the swing low, the swing high, swing low. So when you are a swing trader, you are willing to buy. Now, what is the structure? What is the trend of this market? You find out that the structure or trend of this market is headed towards the top. Hence, we're looking forward to buying only. So any sellers we are not interested in selling, we are looking forward to just buying. So basically, we want to take our buys from the swing low. Remember the principle of trading. You buy low and you sell high. You want to be buying at a lower price and you also want to be selling at a higher price. So basically, it is you buying low and selling high, buying low and selling high. That is what swing trading involves. So when you are a swing trader, you want to buy at a low price and let the trade run for a long period of time. Imagine you're buying from here, you are holding the trade in between all these troughs and peaks. You're holding the trade in between all of this and taking advantage of the trend. So when it comes to swing trading, you are not necessarily after how much you're making. What you are basically focused on is how long am I willing to hold this trade position? I think that is what you're basically focused on. How long am I willing to hold these trade positions? So that is what you're basically focused on when it comes to you trading or swing trading rather. I'm sure we have a proper understanding of these patterns of trading. So I'm going to move over to the next now. I'll move over to the next now and explain to you as well. So the next thing this is called position. Position trading is the next we have this position trading. Position trading is a type of trading where a trader holds a position on an asset for a long period of time. So this could involve you holding this position for several weeks and even years. So imagine buying a particular currency and holding it for the rest of the year. So it involves you holding this position for several weeks and even for years. So it's more like you buying and holding. So it is the longest trading period among the other three trading periods I have highlighted right here. So this is the longest. So there are certain people who from the beginning of this year, they've probably been buying the USD and they are still buying the USD up to now. So these guys are called position traders. So they take advantage of the trend of the market for the longest period of time. They take advantage of the trend of the market for the longest period of time. So these types of traders are referred to as the position traders. So what does position trading involves? Now it involves using the medium-term time frame and even the long-term time frame. It involves you also holding the positions for weeks, for months, and even for years. That is what position trading involves. You're holding a position for weeks, for months, and even for years when you're a position trader. So the strategy is investing in currencies based on fundamental analysis and even long-term trends. So when it comes to position trading, a lot of fundamentals come to play. Why is this? There are certain fundamentals that affect certain nations. Example, inflation, GDP, war, global environment, and the rest of this. So this is some fundamentals that can move the market in a particular direction for a longest period of time. So it's very important you take this into consideration when you want to be a swing trader. So what is the things or what are the risks that involves or that comes along with position trading? Now it requires a lot of patience. So this is the very funny part. It requires a lot of patience. Imagine holding a trade for a year, for months, and you see your money moving and you are not tempted to take it out. So it takes a lot of patience to be a swing trader or to be a position trader. A lot of patience is involved into this type of trading. A lot of patience is involved into this pattern or into this type of trading. So you are patiently looking at the longest term perspective, forgetting the shorter term perspective. So this type of trading, money is not your basic consideration. Your basic consideration is how long this market will go before you even focus on how much you are going to earn. How long this market is going to go before you focus on how much you are going to earn. So you've seen all these patterns of trading and you can gauge with your activities, your work, and the rest of this. So what type of trading pattern do you think fits into your schedule? What type of trading pattern do you feel or do you think fit into your schedule? Listening to all of these trading patterns highlighted right here. So you can take a while, think about this, come back, and you decide. Because this is gonna, in a long way, determine your success with trading. Now, when it comes to trading pattern again, you must also ask yourself, does my personality accept this type of trading? Example, you may not be a person that is patient naturally, and that is not a bad thing anyways. So Position trading might not be one that will, it might not be one that will work for you at all because you might not have the patience for a longer period of time. So this kind of trading does not uh, link up with your trading pattern or your trading strategies and the rest of that. So to round up with this, let's take the last side of this slide. So what do you need in order for you to choose rightly? Firstly, you need risk tolerance. You must understand, okay, this is the risks I'm taking in the market. Am I okay with this particular types of risks? Number two, you need time commitment. Does my timing, does my schedule allow me to take this kind of risks when it involves trading? Example, you might not be spaced throughout the period of time when you're working. Again, financial goals. Now, there are certain kind of equities you can't use to swing trade or to position trade. It won't allow you to. Then thirdly or fourthly, look at your personality. What kind of personality do I have? Am I a patient person? Am I the type of person that wants to make money and leave the market? Or am I somebody that wants to stay in the market for a longest period of time? So remember, there is no one part of trading that fits every other person. So you must understand the one that fits you specifically and stick to it. Stick to it, align with it till you become very good at a particular form of trading, even before you move over to the next. So this is very important in order for you to succeed as a trader. So I'm sure you've learned a lot from this. I'd please like you to leave a comment on the comment section. We're going to be taking questions from some of the questions that are asked from there. So we'll be answering some questions from every one of that. So please put down your questions, and I'm sure somebody from our team will reach out to answer these questions. So thank you, everybody.